Hi everyone, and welcome to today's presentation, Winning with a Health Savings Account. My name is Michonne Lane here at Health Equity, and I will be presenting on today's webinar. Now, the purpose of today's meeting is to really give you an overview on your health savings account. Before we begin, I do want to let you know that this is just the first of a three-part webinar series that is available to you. The second webinar that's available is our tips to maximize your HSA savings. That particular session is going to allow you to learn more on how to really stretch your HSA dollars. And then the third webinar that you're more than welcome to join is our Health Equity Member Portal Overview. That particular session is going to allow you to navigate and get a better understanding of your banking information all online on your member portal account. So we do encourage you to attend these sessions. You can do that by going to healthequity.com/webinars, where you're more than welcome to join a live session that is hosted bi-monthly, or you're more than welcome to listen to a previously recorded webinar at your convenience. So with that, let's go ahead and dive into the presentation. But first, I do want to give you just a quick background to Health Equity and just kind of give you an idea of what we're passionate about. Health Equity is the oldest and largest dedicated health savings account custodian. And because of that, we are passionate about HSAs and their ability to empower our members to help build savings for their future, but importantly, for their retirement years. You know, with the healthcare industry being as complex and ever-changing as it is, none of us really know what insurance we might have in the future or what medical expenses we may encounter. Because of that, it does make sense to try and plan and save for those future expenses, just like we plan and save for retirement. And having an HSA can really be a wonderful way to do that. So let's go ahead and talk about why. So again, you may be wondering why choose a health savings account, also known as an HSA. So you may hear me reference that throughout the entire presentation. Well, with a health savings account, it not only allows you to start saving now, but importantly, it's going to allow you to save for your future. So how can you start saving now? Well, with being on this type of plan, you are typically going to have a lower monthly insurance premium that is coming out of your paycheck. You are going to see the difference right then and there. And the savings that you are receiving, you may decide to contribute a portion of that tax-free into your health savings account. Now, speaking of tax-free, with an HSA, this is truly a triple tax advantage account where the money is going into your account tax-free, while it's sitting in the account, it's incurring tax-free interest. And as long as you do use this account towards qualified medical expenses, it's always coming out of your account tax-free. So just a great benefit there. Now let's go ahead and talk about how you can save for your future. Because your HSA is an individually owned account, you choose how and you choose when you would like to use your money. One of the great benefits towards an HSA is you never lose what's in your account. 100% of unused funds roll over into the next year for you, and the next year after that, and so forth. The idea behind it is to be able to build up as much as you can every single year, so you truly have a nice safety net for your future and, importantly, for your retirement years. In addition to saving for your future, this account is completely portable. So in the event that you were to change insurance plans down the line, maybe even career paths, or when you eventually retire, this money is still going to belong to you. And it will still continue to be tax-free if you use it for your qualified medical expenses. And not only can you continue to use it for yourself at that point, but you can continue to use this account for your spouse and your tax-dependent medical expenses. And then lastly, speaking of saving for your future, Health Equity does provide comprehensive and easy investment options to allow you to move over your HSA dollars into mutual funds to potentially gain a greater rate of return. And we will go ahead and discuss that later in the presentation. Now, it is important to know that there are two parts when you are choosing a high deductible health plan. You are first going to have the health insurance carrier that is paired with a health savings account here at Health Equity. So if you look here on the left, the health plan is the one who is going to process all of your claims. So when you're going to the provider's office or you're picking up a medication, all of that is going to be billed to your health plan. They again will be the ones to adjust your claim and apply it to where it needs to be with meeting your deductible or maybe you're in that co-insurance phase. Also, please keep in mind that your office visits, your prescriptions, deductible, copay, and co-insurance do all count towards your out-of-pocket maximum. And that's really a big difference knowing that when you're on this type of plan. Additionally, all of your preventative services are covered at 100%. And then that's where it's paired with a health savings account that Health Equity is administering for you. We're going to help show you how you can really utilize this account, what you can use it for, how you can pay providers, everything like that. So if you do have any questions surrounding how you can use this account, maybe your card declined, that's when you're going to want to contact Health Equity. If you do have any questions surrounding if a particular claim was processed, or maybe you want to know where you're at with reaching your medical deductible, then that's when you're going to want to contact your health plan. It's really important to know that we do work together for you. However, we are separate. All right, so how does an HSA qualified plan differ from a more traditional health plan? Well, either plan, you are still going to have the insurance coverage, and claims will still be processed for you. The two plans really differ in two ways here. And that first is just the amount that you're going to pay for your larger premium, just to have the insurance coverage. And the second is that deductible, and that's the amount of money you're responsible to pay out of pocket before the insurance kicks in and pays a piece of that for you. So if we're comparing the traditional plan to the HSA qualified health plan that you see here on the screen, we do like to keep it rather simple. So let's say we have $2. On the traditional plan, both of those $2 are going straight into that larger monthly premium that you see there. Now you do have a lower deductible, but you are going to be paying those $2 regardless if you're using this plan once or 100 times throughout the year. Now let's go ahead and switch on over to the HSA qualified health plan, where we do have the same $2. And in this scenario, only $1 is going to that lower monthly premium. So you are paying less to have the insurance coverage. Now you do have a higher deductible, but to me, the real benefit is to be able to take that second dollar and set it aside tax-free in your health savings account. So you do have it for your medical expenses when you truly need it. Again, as I've mentioned, your money is going into this account tax-free, is growing tax-free for you, and importantly, it's really accumulating for your future. So how does an HSA work as far as money going in and out of the account? Well, it simply allows you and also your employer to be able to make contributions tax-free into your account. Once the funds go into your account, it really is your money in your account. You can choose to use your funds now towards your qualified medical expenses, or you can choose to have it roll over every single year to really accumulate for your future. Now, it is very important to note that the IRS does regulate what you can use these funds on to keep it tax-free. So the general rule of thumb is you can use the HSA for medical, dental, vision, and prescription expenses. You may also be surprised to know that you can use this account, for items that may not even be covered under your insurance company. Some examples are going to be LASIK eye surgery, chiropractic services, and orthodontia expenses. Now, to see a complete list of what is a qualified expense, since it is the IRS that does regulate this, they do house this information on their IRS website called Publication 502. However, we have compiled that information and made it a little bit more of a friendlier version on our website. So you're more than welcome to go to healthequity.com/QME. It stands for Qualified Medical Expense. Within that website, you're more than welcome to see what is qualified under the health savings account. You can even search for a particular expense that you have in question. Additionally, there's two other lists that you can view. The second list is going to show you what potentially is covered under the HSA if you have the proper documentation. And the third list is going to show you what simply is not covered under a health savings account. And then lastly, what I want to mention with the HSA, once you achieve that age of 65, with this account, you no longer need to use it for qualified medical expenses if you don't want to. At that point, you just need to pay income taxes on those funds. That's where it gets real similar to a 401k. And then again, you can use this account for a non-qualified expense. You would not face any penalties on that. Now, if you always use this account towards a qualified medical expense, the funds will always remain tax-free. So just an opportunity that you have available to you once you do turn the age of 65. All right, so we're going to slightly switch gears here and focus on how the HSA is going to work when you're going to the doctor's office and when you're picking up a medication. So let's go ahead and go through the steps here. Now, before the first step, you do want to provide the doctor's office with your health plan insurance ID card. From there, we're going to go ahead and take you to step 1, where you're going to be able to receive the service. Now, let me just back up a little bit here. With being on this type of plan, you should not have to pay anything at the time of service. You shouldn't even have any co-pays. So you would just go ahead and be able to receive your service. Now, once you do receive that service, that brings us to step 2. That is going to allow the provider to go ahead and bill your health plan. Once the health plan receives that claim, they're going to be able to apply your service. They're going to go ahead and apply that to apply the proper negotiated discounts, and then from there they'll apply it to your medical deductible, or maybe you're in that co-insurance phase. Once that claim has been processed, that will allow your health plan to create what's called an EOB, also known as an explanation of benefits. That health plan is not only going to send you a copy of that EOB, they're also going to send a copy of that EOB on over to your provider and let them know what your provider can charge you. And that brings us to step 4. About the same time, you are going to receive that provider statement showing you what responsibility you owe to them. And then you should receive your EOB from the health plan. Before you do make any payments, it's really important to please make sure that both of those documents match up. Make sure that your responsibility is the same. Once everything looks correct there for you, then you're more than welcome to use your health savings account to be able to pay for that medical expense. If you don't have enough funds in your account, or maybe you want to allow your HSA to grow and you don't want to touch those funds, you're more than welcome to use another form of payment. And the great thing is you can request reimbursement from your health savings account at any later time. One of the benefits that I truly like about an HSA is there is no time limit on when you need to request reimbursement by. So you can truly wait a year down the line, 5 years down the line, even 10 years and more to request reimbursement out of your health savings account. So just know that is available for you. All right, so now let's go ahead and focus on what it's like when going to the pharmacy. It is a little bit different, but your first step will be the same. You do want to provide the pharmacy with your health plan insurance ID card. And then, as we all know, when picking up a medication, you do need to pay for it at the time of service before you can pick up that prescription. So once you provide the pharmacy with your insurance ID card, once they have that information, they are actually able to tap into your insurance in real time to determine right then and there what your responsibility is. And then again, that brings us to step 3. You're more than welcome to use your HSA to pay for that prescription, or you can, again, use another form of payment and request reimbursement at a later time. Now, because this is a tax advantage account, the IRS does limit how much can be contributed into a health savings account every single year that you're covered under an HSA qualified health plan. So let's go ahead and go over the contribution limits for 2020. So if you're on a single coverage, meaning you're just covering yourself under your health plan, that is going to allow you to contribute up to $3,550 into this account. For those on a family coverage, meaning you're just covering yourself and one or more dependents under your health plan, that will allow you to contribute up to $7,100 into your HSA. Now you can see here that the tax savings can be pretty substantial. I don't know about you, but in some cases this could be a house payment, if not a car payment. So just the potential savings there is pretty incredible. Now I do want to focus now on that catch-up contribution that you see here at the bottom of the screen. This is available for individuals just turning the age 55 this year and who are older. This would allow you to contribute an additional $1,000 into the account. So regardless if you're on the single coverage or a family coverage, you do have the opportunity to contribute an additional $1,000 into the account. Now, the reason being is the IRS views you as someone gearing up closer to those retirement years. This just gives you a little bit more of a chance to really help build up a nice safety net for your future. And at the very least, we do encourage our members to make deposits into their HSA that match their medical expenses incurred so they can benefit from the tax savings. I like to think of it as I'm already going to be paying for those medical expenses. Why not first put that into a health savings account so I can reap that tax benefit? All right, so now let's go ahead and go over the many different ways that you have access to adding funds into your health savings account. The first way, and my most preferred way, is by making what's called a pre-tax contribution through your payroll. So this just allows you to go ahead and set up how much you would like to have deducted out of your paycheck each pay period and placed directly into your health savings account. It's truly a set it and forget it, and that's why I like it so much. Now, one of the great benefits to an HSA is you can change your payroll deductions at any time in the year. So if you feel like you're putting in too much into your account and you want to pull back slightly, or maybe you feel like you're not putting in enough, you can truly change what you're putting into the account at any time. Another method with how you can add funds into your HSA is by making what's called a post-tax contribution directly to your health savings account. This is where you could go ahead and send in a check to Health Equity. You would just need to accompany that with a contribution request form, or you're more than welcome to log in online to your member portal account and set up an EFT, also known as an electronic transfer. And that would allow you to transfer funds from a personal checking or a savings account straight into your HSA. Now, just to reassure you, since this is a post-tax contribution, you will still reap the tax benefits. To do that, you just need to make sure that you do file this at the end of the year with your taxes, and that is considered an above-the-line deduction. And then lastly, you can make contributions until the tax filing deadline for the previous tax year. So you do have additional time to make contributions for that previous year. And then before we move on from this screen to speaking of contributions, I do want to let you know, it's just really important, we see this often, is any contributions that you are receiving from your employer and any contributions that you're putting into your account, regardless if it's a pre-tax contribution or a post-tax, that all goes towards the annual IRS limit for that year. So please just make sure you are not exceeding the IRS limits for that year. All right, so it is really important to note that there are eligibility requirements to allow you to contribute tax-free into your health savings account. So the number one rule is you as the account holder can only be covered by what is considered an HSA qualified plan. Again, you cannot have any other types of coverage unless it's another qualified health plan. So let's go ahead, per the IRS guidelines, review what could disqualify you from adding funds into your health savings account. So the IRS does state that you as a primary account holder cannot be covered under TRICARE, any part of Medicare, or another traditional health plan. In addition, you cannot have access to a full purpose flexible spending account, also known as an FSA, even through your spouse. So if your spouse does have a flexible spending account, then unfortunately that would prevent you from being eligible to add funds into an HSA. The reason being is the IRS does view that account as dual coverage if you have an HSA, because these accounts can be used on the same individuals for the same expenses. So again, you can just only have one or the other. And then lastly, to remain eligible, you cannot be claimed as a dependent on anyone else's tax return. All right, so now let's go ahead and just focus on your healthcare costs that you could potentially face in your retirement years. If you look here on the screen, the average couple retiring this year will approximately need $301,000 just to cover their medical expenses in retirement. And those are medical expenses that are not covered by Medicare. If you think about it, if you do not have an HSA available to pay for those medical expenses in retirement, you're probably going to access those funds from a 401k or an IRA that you've been putting into throughout the years, which is really great. However, as we all know, you are going to be paying taxes on those funds at some point. Whereas if you were to put this money solely into a health savings account, as long as you did use the funds towards qualified medical expenses, you're never going to be paying taxes on those dollars. Again, the money is going into your account tax-free, it's growing tax-free for you, and it's coming out of your account tax-free. Now, I do want to say that this is not to say that a 401k or an IRA are not great accounts, because, again, they are. They're great for our retirement. This is just to say that if you can pair an HSA with those accounts, together they can help offer that optimal retirement planning solution for you. And speaking of retirement, the HSA can help cover that Medicare gap for you. The below expenses that you see here are typically not covered by Medicare, and we can all guess how costly some of these items can really be. So knowing that you can use your HSA to be able to pay for these expenses to help cover your Medicare gap can be incredibly reassuring. So that number that we saw in the previous screen, that number also includes Medicare premium. So you'll see here that you can use the HSA once you turn the age 65 to pay your Medicare premium. So it's just a really great help there for you. Now, continuing into retirement, you do want as much money nested away as possible, and investing can really be a great way for you to do that if you wish. Instead of waiting for your interest rates to help build up, you can invest. Just by taking advantage of investment options, you can maximize your tax-free earning potential to help pay for your healthcare costs now and in your future. To get started, you would need to meet a certain threshold in your available cash balance, and then anything above that threshold, you're more than welcome to begin investing if you wish. And here are the options when you do think about investing your HSA dollars. We first have what's called our advisor product, which is a web-based investment advisor. You can go ahead and subscribe and to receive investment advice. Now, within that advisor product, there are 2 service levels for you to choose from. You do have the GPS option or the autopilot option, and I'm going to go ahead and quickly expand on each one here. Now, the GPS option, there is a fee to use that. It's a fee of 50 cents per month per $1,000 that you have invested. What this tool is going to do for you is once you set up your personal risk profile, this tool is going to go ahead and advise you on which funds to move over your money into. Now, it's just like a GPS system, if you will. You can choose to follow that advice if you wish, and follow that route, or maybe you know of a better route to take, then you can go ahead and disregard that advice and choose the mutual funds that you want to buy into. And then next is our autopilot option, and this fee is 80 cents per month per $1,000 that you have invested. This is what I personally like to use, as I'm not very savvy when it comes to investments. What I like about it is once I set up my personal risk profile, this tool is automatically going to go ahead and move my money over into mutual funds that it finds that is going to be the best suit for me. What's incredibly nice about it too is this tool is automatically going to sell me out of that fund when it's not performing at a certain grade that we have set here with Health Equity. And then lastly, what we do have is what's called our self-driven option, and this is not an advisor product, so there is no advisory fee. Everything regarding investments is truly going to be managed by you, and there is no advice given with this feature. So as you can see, we do have different options available for everyone to help potentially gain a greater rate of return back into your health savings account. All right, we are about done with this presentation. I quickly just want to go over some 10 frequently asked questions with you that we often get here at Health Equity. So the first question, how do I contribute to my health savings account? Well, as we previously reviewed, there are several different ways for you to do that. You can go ahead and set up payroll deductions for pre-tax contributions. And again, you can change those deductions at any time throughout the year. You can also make a post-tax contribution, and by doing that, you can call Health Equity, you can go online, and you can set up an EFT account to transfer funds from a personal checking or a savings account. And also, you can go ahead and send in a check with a contribution request form. Number 2, how do I find out my account balance? Here at Health Equity, it's really important to us that you just have as much access and just a really great experience. So a couple different ways with that. You can go ahead and log in online to your member portal account where you can see your account balance right away. You can call Health Equity and speak to a live representative, or you can go ahead and retrieve your account balance through the automated phone system. Number 3, how do I use my HSA to pay for my prescriptions? Again, simply go ahead and swipe your HSA Visa card at the pharmacy. Number 4, I forgot to pay for a prescription with my HSA card. How do I get reimbursed? Again, here at Health Equity, we want to give you as much resources as possible so you can go online and set up that EFT account and request reimbursement. That would allow us to send the funds directly to you within 2 to 3 business days. Or you can call Health Equity. We can help do it for you over the phone. In addition to, with requesting reimbursement, if you didn't want to receive the funds to a personal checking or savings account, you can go ahead and request a check. There's just a $2 fee generally to do that. And then number 5, where can I use my HSA card? You're going to go ahead and run it like a credit card. It is important to note that the HSA is medically coded, so it does need to recognize that it's being used at a medical establishment. Number 6, can I get a card for my spouse? Absolutely. You can go ahead and log in online to your member portal account and select Manage Cards to request an additional one, or you're more than welcome to call our account mentor team at any time. Number 7, will I receive a statement for my account? Yes, you will. You can go ahead and select to receive your monthly statements through the mail or electronically. Number 8, is my HSA FDIC insured? Absolutely. The funds that, of course, that you're not investing. Any funds that is available in your available cash balance, they are FDIC insured. Number 9, does the money I have in my HSA roll over from year to year, or do I lose the money at the end of the year? You never lose what's in this account. 100% of unused funds roll over every single year. And again, it's always going to be there for you to use it for your qualified expenses. And you do earn interest on it once it's still sitting in the account. And then number 10, do I pay for the full doctor's office visit when I go to the doctor? Now, some doctors are going to require you to pay up front. Most will bill you later. Just remember that you are responsible to pay the discounted amount determined by your insurance benefit. Just don't let the doctor overcharge you at the point of service. And then that just leaves me with a few powerful tools that, again, you have available to you at your fingertips. The first tool that you have access to is your Health Equity debit card to be able to help pay for these expenses. In addition, you do have access to your member portal account at any time, and then also a mobile app that you can download. It is free. It's available for all iOS and Android users. Now, between the mobile app and the member portal account, you can pretty much do the same. You can check your balance at any time. You can review your transactions, review your claims. In addition, this is another outlet for you to be able to pay your provider and also request reimbursement. And then lastly, I would say our most powerful resource is our account mentor team. Please never hesitate to reach out to this department. They are truly the heart and soul of our company and highly educated on these accounts. And again, they are available for you every hour of every day. So never hesitate to reach out to us. We're more than happy to always assist you. That does conclude my portion of the Health Savings Account presentation here today. So again, thank you so much for your time and have a great day.